Picture this. You and your business partner build something real, a real company, real revenue, real clients. Then one day a disagreement happens. Maybe it's about money. Maybe it's about who gets to make decisions. Maybe one of you wants out. And you pull up your operating agreement, that document you downloaded for free from some random website back when you started, and you realize it says absolutely nothing. Or worse, it says the wrong thing. And now you're looking at a legal battle that could cost you tens of thousands of dollars and potentially destroy everything you built. Here's the scary part. Over 70% of multi-member LLCs are operating with either no operating agreement or a generic template that was never designed to protect them specifically. I'm going to say something that might upset some people today. Free templates are costing business owners more money than they save. In this video, I'm going to show you the 3 most critical clauses you need in your LLC operating agreement for 2026 clauses that most templates completely leave out, and I'm going to show you exactly where to get a real legally sound agreement done without paying a lawyer $500 an hour. Stay until the end because clause has 3 is the one that could save your company from literally disappearing overnight. Why templates failed you. Let's talk about why template operating agreements are a ticking time bomb. When you Google free LLC operating agreement or download a template from a generic website, you're getting a document that was written to be one size fits all. And in business, one size fits all means it actually fits nobody. Here's what generic templates typically cover. Basic ownership percentages, basic profit distributions, maybe a section on voting rights. That's it. What they don't cover is the stuff that actually tears businesses apart. The edge cases, the real life scenarios. The 2026 business environment with remote partners, digital assets, funding rounds and buyout situations that simply didn't exist when most of these templates were written. Now look, I'm not saying you need a $5,000 custom attorney drafted document from day one. What I am saying is, if you're using a formation service like Northwest Rigid, Zen Business, LegalZoom, Taylor Brands, or Swift Talons, most of these platforms actually offer upgraded operating agreement options or legal add-ons that go far beyond what a random free template gives you. And for the price of a dinner out, you can get actual legal protection. But here's what even those upgraded templates sometimes miss, and this is where we need to get into the 3 non-negotiable clauses for 2026. Clause number 1, the buyout and valuation clause. Let me paint you a scenario. Things are going great for 2 years. Then life happens. Your partner wants out. They want their 50%. 50% of what exactly? Is it 50% of the bank balance right now? Is it 50% of the company's projected future earnings? Is it 50% of assets minus liabilities? Who decides? Without a clear buyout and valuation clause, a court decides, and courts are expensive and slow and unpredictable. A proper buyout clause in 2026 needs to include 1. A clear valuation method. Whether that's a fixed multiple of revenue, an independent appraiser, or a book value calculation, it needs to be written down before anyone wants out. 2. A right of first refusal. This means if one member wants to sell their share, the other members get the first opportunity to buy it before an outside stranger can come in. 3. A payment timeline. Can a buyout be demanded immediately? Is there a 12-month payment plan? This protects cash flow. Services like Inc. Authority, Rocket Lawyer, and Harbor Compliance offer operating agreement customization that can help you build these terms into your document without starting from scratch with a blank page. Don't wait until someone wants out to figure out how buyouts work. That's like writing your prenup the day you're filing for divorce. Clause number 2, the Deadlock Resolution Clause. This one is specifically for 50/50 LLCs and it is widely underprotected in most templates. Here's the nightmare scenario. You and your partner have equal ownership, equal voting power, and you completely disagree on a major business decision. Maybe it's whether to take on a big investor. Maybe it's about hiring or firing someone critical. Maybe it's about pivoting the entire business model. You both dig in, neither blinks. The company grinds to a halt. This is called a deadlock, and in states like Delaware, California, and New York, a deadlock can actually be grounds for judicial dissolution of your LLC. meaning a judge can literally order your company to be dissolved because the owners can't agree. A proper deadlock clause gives you a pre-agreed pathway out of that nightmare. Option A, a designated tiebreaker. Identify in advance a third party, an advisory board member, or a trusted mentor who gets the deciding vote when partners are split. Option B, a mediation first requirement. Before any legal action, both parties must go through structured mediation. This alone saves most deadlocks. Option C, a buy-sell or shotgun clause. This is advanced but powerful. If a deadlock can't be resolved, one partner names a price for the business and the other partner must either buy at that price or sell at that price. It forces a fair resolution fast. Brizy is a newer platform in this space that specifically focuses on customized legal documents for modern startups. Worth checking out if you want clause level customization without a full legal retainer. The rule is simple: decide how you'll fight before you have to fight. Clause number 3, and this is the one that can literally erase your ownership if you're not careful: the capital contribution and anti-dilution clause. Here's how this plays out in 2026, because this is increasingly common with startups and early stage businesses. Your LLC needs money. One member or a new investor wants to put in more capital. They inject $200,000 into the business. In many template agreements, that contribution automatically increases their ownership percentage, diluting everyone else's stake. So the person who built the business, who had 50% ownership, suddenly finds themselves at 30% or 20% without agreeing to it explicitly. And here's the brutal truth: some of these operating agreements are written so vaguely that this can happen without a formal vote. Your capital contribution clause needs to do 3 things. First, define exactly what qualifies as a capital contribution: cash only, equipment, services rendered, intellectual property. Every form of contribution needs a definition. Second, pre-establish how new contributions affect ownership. Either contributions are loans to the company or there is a pre-agreed dilution formula that everyone understands before money ever moves. Third, establish anti-dilution protection for founding members. If the company takes on outside investment later, founding members should have a right to maintain their percentage by participating in funding rounds. Platforms like LegalZoom, Zen Business, and Taylor Brands let you upgrade your operating agreement package specifically to include financial and investment clauses like these, and is often under $100. Compare that to losing 20% of your company because of a vague template. The math isn't even close. Here's what I want you to take away from this video. Your operating agreement is not a formality, it's not a box to check, so the state approves your LLC. It is the rule book of your business. And in 2026, with the speed at which companies evolve, take on capital, add partners, and face real pressure, a generic template is not sufficient protection. The 3 clauses you need right now are: 1. A buyout and valuation clause, so you know what leaving looks like before anyone leaves. 2. A deadlock resolution clause, so a disagreement never becomes a dissolution. 3. A capital contribution and anti-dilution clause, so your ownership stake is protected when money comes in. Whether you're just starting your LLC or you've been operating for years, review your operating agreement this week. If it doesn't address these 3 things, get it updated. And if you want to see my breakdown of the best LLC formation services of 2026, which ones give you real operating agreement support versus just a generic download, that video is right here. Don't just form your LLC, protect it. I'll see you in the next one.